Hello everyone and welcome to listen to Tax and Customs Board presentation on tax changes that await us the next year and in 2026. My name is Aune-Maria Marjavuu, but today's presentation will be conducted by my colleagues Merje Roomet and Marko Kõiver. We will record today's presentation and add the recording with the slides to our website. Unfortunately, we will not have any time at the end of the presentation for questions, but all feedback and questions can be sent to email addresses on the final slide. Today's topic. Today we will cover changes in the following topics, and the topics will be personal income taxation, also self-employment, EA sole entrepreneurs, and proprietors, and entrepreneur account. Also, we are going to cover the company income tax, corporate income tax, and introduce the security tax, which is also known as the defense tax. And the most important thing to remember is that the subject matters of today's presentation is based on draft laws, which means it is liable to change in the future. All subsequent changes will be announced on our website, so keep an eye on it. And we can continue. Please, Marko, the floor is yours.
Thank you, Aune, for a good introduction. Let's start with income of a natural person. Starting from the next year, income tax to be withheld will be 22%. Basic exemption up to 654 euros per month and up to 7,848 euros per year. It depends on a person's income. Basic exemption at retirement age is 776 euros per month and 9,312 euros per year. Social tax rate is 33%, and minimum obligation is based on monthly rate of 820 euros. Hence, minimal social tax will be 270 euros and 60 cents. Unemployment insurance premium will remain the same. 1.6% for employees and 0.8% for employers. Funded pension contribution will be 2%, 4%, or 6%. As you can see from the slide, the so-called tax hump will remain in force in next year. Let us move to income tax return submission. For the year of 2024, submission will start from February 15, 2025. Income tax rate is 20%. For the year 2025, submission of income tax return will start on February 15, 2026. Income tax will increase. It will be 22%. For the year of 2026, submission of income tax form will start from February 15, 2027. Income tax rate will be 22%. And that brings us to the next information. In 2025, the following deductions will be made. Basic exemption, 7,848 euros, or 9,312 euros at the retirement age. Fortunately, you can deduct training expenses and donations in sum of 1,200 euros. Last but not least, contributions to supplementary funded pension in up to 15% of taxable income, but not more than 6,000 euros per year. Funded pension contribution. Next year, it will be 2% by default. However, it is possible to submit an application and choose a higher rate of 4 or 6% respectively. In the future, the rate of the contribution can be changed only once a year by submitting an application by November 30 of the year. And as a result, the new rate will take effect on January the 1st of the following year. And that brings us to tax rates from January the 1st, 2026. Income tax to be withheld will be 22%. Basic exemption will increase to 700 euros per month and 8,400 euros per year, regardless of the size of income. The corresponding numbers at the retirement age will be 776 euros per month and 9,312 euros per year. Unemployment insurance premium will remain the same, 1.6% for employees and 0.8% for employers. Funded pension contribution will be 2%, 4%, or 6%. And new tax will be introduced, security tax or so-called defense tax, to be withheld, 2%. And that brings us to security tax. It is planned to be 2%. It will be in effect from January 1st, 2026, and will last until 31st December 2028. It doesn't reduce the income subject to income tax. It is applicable from the first euro, and it is not applicable to the calculation of basic exemption. The following income will be subject to security tax. For example, wages, pension, taxable allowances, bank deposit interest rates, wages received from a foreign state, which are exempt from income tax in Estonia, also dividends received from abroad, business income, gains from the sale of real estate and other assets, gains from the sale of securities, and last but not least, gains from the sale of cutting rights and timber without deductions. Investment account, it will face a lot of changes. Investment account is a cash account. It can be opened with a resident credit institution. Retroactively, investment account can be opened at a bank, at a payment institution, at an e-money institution, at an investment firm. And in the next year, there will be no changes. Financial assets retroactively can be debt security, foreign exchange spot contract, crowdfunding loan and participation, and margin loan. As of 2025, financial assets will be covered bond and crypto assets. As I told before, investment account is a cash account. It can be opened with a resident credit institution. With a resident credit institution of a contracted state of the European Economic Area Agreement or a member country of the OECD, or with a credit institution's permanent establishment, for example, bank. Investment account is a cash account that is opened with a payment institution or e-money institution. Investment firm should be located in a contracting state to the EEA agreement. There are 27 member states of the EU. Also Norway, Iceland, Liechtenstein are contracting parties to the European Economic Area. Account opened with an investment firm may be declared as an investment account if the investment firm distinguishes the money of its own and of its clients. And investment account can be in a bank only, and an account opened with an investment firm can be used for an investment so that the income received from financial assets does not have to be transferred to the investment account immediately. So investment account is cash account and securities account. What is opening and closing of an investment account? It is declaring a bank account, international bank account number, details of an account opened with payment institution or e-money institution or investment firm in the income tax return. Investment account allows deferring the payment of income tax on reinvested securities, interest, and dividend income. And that brings us to financial assets. According to Income Tax Act, financial assets are securities, debt securities, investment funds, derivatives, also covered bonds and loans, and crypto assets. In order to postpone income tax liability, two criteria must be met. Firstly, you have to acquire financial assets for the money held in an investment account. Secondly, the income derived from financial assets must immediately be transferred to the investment account. However, there are some exceptions. Money doesn't have to be transferred to the investment account in the event of exchanging financial assets, or if the income from financial assets held in an account opened with an investment firm or in an account opened on a platform operated by a crowdfunding service provider, or income from financial assets held in an account opened with an investment firm or in an account opened on a platform operated by crowdfunding service or crypto assets service provider. And now that we know how to postpone income tax liability, let us draw our attention to contributions to and payments from investment account. You have to declare on income tax return contributions and payments. Tax dividends and interest are taken into account as a contribution. However, untaxed dividends and interest are not taken into account. Payments from investment account deserve more attention. Payments from investment account are all transfers made from an investment account which are not used to acquire financial assets or to transfer money to another investment account of the taxpayer. Payments from investment account are also income derived from financial assets, which is not transferred to the investment account immediately. However, there are some exceptions, and in principle they are the same as 2 slides before, as we were speaking about in order how to postpone income tax liability. Payments from investment account. What are not these payments? Firstly, conversions of currency to acquire financial assets. Secondly, payments from investment account are not fees related to the use of an investment account, securities account, or a platform operated by a crowdfunding service provider. And lastly, fees related to the use of an investment account, securities account, or a platform operated by a crowdfunding service or crypto asset service provider. And margin loan. A margin loan is not treated as a contribution to an investment account, and the repayment of the principal amount of the margin loan is not treated as a payment from the investment account. A margin loan is a transaction in which credit institution or investment firm grants a loan in connection with the purchase, sale, holding, or trading of securities. Keep in mind that interest paid on the loan must be shown as a payment from the investment account. And that brings us to income from securities, and I will give the floor to my colleague Merje.
Hello, I am Merje Roomet. I am tax specialist of the Estonian Tax and Customs Board, and I apologize for the English language. Maybe if it is not the official language of Estonia. So in case of any differences in the meaning or something, please turn to the Estonian text instead of the English one. Let's go further with changes which will be in taxation of income of securities. Retroactively, since the year of 2024, there will be some additional possibility to deduct losses. It was not possible before, but now you can deduct losses also from crowdfunding, also service fee, which is deducted from securities account, and service fee from crowdfunding platform use. This is something new which has not been before in previous tax years. So in addition to that, starting since 2025, there will be some additional deductions available. Since then, you are able to deduct losses from the redemption of bonds. Also, it is possible to take into account losses from crypto assets should you have any income. It is possible to decrease the taxable income then. And also, it will be possible to deduct platform service fee in case of crypto assets platform. It is now included to the Estonian Income Tax Act that crypto asset transfer is regarded as transfer of property in Estonia for the taxation purposes since the following year. It is something new again, and a redemption of a security and ending of validity of a security or other monetarily appraisable right is treated as a sale of the security in the future, meaning that it is possible to deduct cost also in such cases, and the taxation will be similar to that of transfer of property in the future. Retroactively, since 2024, you may deduct as acquisition cost of securities a fee related to the use of securities account, which was not possible before, and also the use of a trading platform for crypto assets, and any fees for the use of the crowdfunding service platform may be added to the acquisition cost of a loan claim, security or holding acquired through the crowdfunding service provider. And all those deductions are possible vice versa. Crowdfunding losses are you can deduct those since this year, starting from this year. If you have a loan claim, you can deduct losses directly related to this loan claim from the income taxable, as well as losses incurred because of a loan claim that has been assessed as irrevocable by the crowdfunding service provider in the same tax period. Those different kinds of losses can be deducted from the securities losses as a whole, from the total securities losses, no matter which type of securities those are, and vice versa. The crowdfunding loss provision does not apply to losses incurred on financial assets acquired via an investment account, about which Marko has told you before. This investment account is a special regime for taxation, which is different from that of the usual one, and then such kind of losses cannot be deducted. Crypto asset losses as of the following year, starting from the following year, you can deduct losses from the transfer of crypto assets, from the gains from transfer of securities of the same period. Crypto asset losses can be deducted from losses from securities and crowdfunding and so on, meaning that all kinds of property, which I have told you today, have a similar right to deduct losses, all those assets. And similarly to the provision I told you before, the crypto asset losses cannot be deducted in case of a special tax regime of an investment account. In order to use an investment account, contributions and payments and the amount to be carried forward to the following periods should be declared every year, no matter if there is a taxation event or not. No matter of that, in order to use the special tax regime, the contributions and payments should be declared. And also, service fee for the use of an account or platform to be deductible, it should be declared annually, no matter if there is any income taxable in this year or not. That is how the system of the investment account works. Losses to be deducted or carried forward of uncovered losses to subsequent tax periods should also be declared every year, annually. All this applies no matter if you use investment account or you have the general taxable income of transfer of securities. Losses and fees should be declared annually if you would like to take those into account to be deductible from the taxable income in this or in the following years. Now let's move on to another topic and changes which apply to entrepreneur account. Entrepreneur account is again a special tax regime. It is actually a special bank account which is possible to be opened in some of our Estonian banks, where payment of taxes is done automatically on the basis of the entries on the account. That means that the person who has opened this entrepreneur account does not have to be registered as a sole proprietor, but still business tax is calculated on it by the bank and also transferred to the Estonian Tax and Customs Board. So there is no need to some special business declaration in such a case. It is allowed only in limited cases because it is useful for persons who provide services to other private persons, and in the areas where there are not so many costs because of the business, because it is not possible to deduct any costs or expenses in such case of entrepreneur account. And in addition to that, should the service be provided to any legal person, that legal person has to pay additional corporate income tax. From the payment, it is needed to avoid wrong use of the entrepreneur account to avoid employment taxes. That is why this additional provision of corporate income tax is applicable in case of payment to the entrepreneur account. This regime does not change now, but it is here because we would like to turn to your attention to the new tax rate since the following year in case of corporate income tax. The rate of business income tax in case of that entrepreneur account will not change since the next year to 22%. It is still 20%, but the additional rate of 40% disappears, which has been before in case of bigger or larger amount of income of a person. So that 20% applies to all income received on entrepreneur account. But still, there are some rules in case a person who has entered that entrepreneur account, if that person has also joined the second pension pillar. As told before, the rate of second pension pillar contribution increases since the next year, depending on the choice of the person. It may be either 2%, 4%, or 6%. And in case of the entrepreneur account, this funded pension contribution is, depending on the rate, is added to the 20% of business income rate to any payment to the entrepreneur account. In addition to that, you should bear in mind that in order to receive health insurance, the minimum amount of 2,255 euros must be paid to the entrepreneur account in every calendar month, because if that amount is less than that, there will be no health insurance, no matter that there is a payment. Entrepreneur account users who receive business income which is more than 40,000 euros per year must change the type of business. The use of entrepreneur account is not allowed anymore. They should be registered as business in some other ways, for example, as sole proprietor or FIA in Estonian, or through a private limited company or osaühing, or something like that. This simple way of paying taxes will not be possible if the income is more than that 40,000 euros per year. Now some words about dividing this 20% of business income tax in case of entrepreneur account. And here you can see that this business income is divided also to social tax. Part of it is income tax and part of it is social tax. And for example, if 1,000 euros is paid into this account, 200 euros or 20% of business income tax is transferred to the Estonian Tax and Customs Board, and it is divided to 80 euros as income tax and 120 euros as social tax for the person. But should the same person be the one who has joined the second pillar, then this second pillar contribution will be added to this 20%, depending on the amount of tax rate of the second pillar contribution chosen by the person. If it is 2%, 4%, or 6%. And on this slide, you can see how it is calculated, meaning that the income tax and social tax will be the same, but just the funded pension contribution is added to this business income in any case. Security tax or defense tax, in other words, planned since 2026 is also applicable to entrepreneur account, in addition to that already there. And thus 2% will be added, and the business income tax rate is 22% then. Again, any second pillar funded pension contribution will be added to this 22%. So, as you can see from this example, if should the person have a payment of 2,500 euros transferred to the entrepreneur account, he or she receives 1,800 as a result after deducting business income tax, 22%, and if he or she has chosen the rate of 6% of contribution, then this 6% also is added to this deduction. Now that was information about changes to entrepreneur account, but now if a person has registered as a sole proprietor, here will be some changes also in such a case. Sole proprietors or FIEs in Estonia. The one fact which is good to be remembered is that in case of advance income tax payments applicable to FIEs, in year of 2025, the tax rate for calculation of advance payment is still 20% because it is calculated from the profit calculated in year 2024. And here you can see an example about this calculation. Advance income tax payment is done twice a year, only by 15th of September and by 15th of December, and the formula for calculation of this is can be found on this slide. Just the taxable profit of the year 2024 is multiplied by the tax rate of 20% and then divided by 4. And you can see it is 310 euros here, and you should pay this amount twice. This 22% of tax rate applies to advance income tax payment only since 2026, because then it is calculated according to the income which was received in 2025. Now, some words about advanced social tax payable by FIEs or sole proprietors. It is important to check every year which is the amount on which that minimum obligation of social tax should be paid in order to it is needed because otherwise it is not possible to provide any social benefit. And this minimum obligation should be paid no matter if the sole proprietor has earned any taxable income or not. It is needed to be paid. And the monthly rate changes from year to year, and since 2025, the monthly rate is calculated on 820 euros, and social tax calculated on this amount is 270 euros 60 cents. So as the advanced social tax payment liability is should be paid quarterly. The amount to be paid in a quarter is 811 euros 80. And you can see also formula for calculation of that. In case of advanced social tax payments, the due date is 4 times a year, once in every quarter. Should sole proprietor have also spouse working for the same business, they work together, then in order to receive social benefits, it is needed that also advanced social tax payments should be paid for the spouse of the sole proprietor, and the amount to be paid should be declared on Form EST, and the amount may change from year to year, and this time this amount is 270 euros 60. As it has been told already by Marko before, that a person can choose which rate of funded pension contribution applies to him or her since the following year, 2025. The same applies also to sole proprietors. The difference here is that sole proprietor declares income only once a year, and that means that this new rate is payable, in fact, only in the year 2026, because only then the income of 2025 will be declared. And the calculation is on income tax return form E. If a sole proprietor has no taxable income, then this funded pension contribution should not be paid. It is not payable then. It is something different as compared to the advanced social tax payment, which should be paid even if there is no taxable income. Security tax or defense tax also will be applicable to sole proprietors, but it is just not finally clear just now, but we can introduce you the plans that not all the deductions which are possible in a case of income taxations will be possible for calculation of security tax, meaning that in case of agricultural products self-production or in case of sale of timber or cutting rights, it is not possible to deduct 5,000 euros upon the income. And also the special account of sole proprietor, the tax exemption will not apply. So the taxable base may be different from that of the tax base of the income tax, but all this is the planned information here on this slide. But just for you to know that sole proprietors also will be paying security tax in the future. Let me go further to another topic now, which is benefits for sick leave. I'm sorry for the mistake on the slide. Benefits for sick leave. There is also a change applicable retroactively since 15th of May this year, that employers may compensate the difference between the remuneration by employers and the payment from health insurance funds benefit for incapacity for work. And the new thing here is that if an employer has chosen to pay this difference between the health insurance funds benefit and the average remuneration of employer, this payment is free from social tax. For example, if sickness benefit is usually paid by health insurance fund as 70% from the remuneration, average remuneration, and employer pays 30%, then this 30% can be paid without social tax obligation. And similarly, in case you should leave from work temporarily because of care leave, and health insurance fund pays 80% of the average salary to the person, then employer may pay 20% of the remuneration, average remuneration, without social tax obligation. Such voluntary benefit payment is also possible in case of a sole proprietor as of the 1st of January this year. Just to remind some rules about it, here you can see there is no special amendments or differences here. When we pay the benefit by employer pays from the 4th to the 8th day of illness 70%, but employer may reimburse 100% of the average remuneration 4 days since the 1st to the 8th. And the health insurance fund pays from the 9th day. The benefit rate is 70% and the employer can pay 30%. And calculation for sole proprietor is a little bit different because the taxable amount is calculated only once a year. And here on that slide you can see the example, if the business income of the sole proprietor is, for example, to 20,000 euros annually, then here is the formula how is the social tax-free amount calculated. So, let me go on with the next slide, because also the similar calculation can be done if the person has to leave because of the care of another person. And again, it is possible to pay reimbursement, the benefit, without social tax. If employer choose or to remunerate the difference between average wage and the health insurance fund benefit. And also the similar calculation applies to social tax obligation to a sole proprietor, where it is possible to deduct the amount taxable by social tax. This calculation, by the way, is done by our application of online e-tax service, tax administration e-service. But for you to know how is it calculated, you can see the formula here. And now Marko will go on with information about legal persons and changes about that.
Thank you, Merje, for a nice overview. Let us talk about income tax of a legal person. In 2025, income tax of a natural person will be 22%. Income tax of a legal person will be 22 by 78. However, lower tax on dividends will disappear. There will be 18% advance payment rate of income tax of credit institutions. In 2026, income tax of a natural person will be 22%. Income tax of a legal person will be 22 by 78. And also, as in 2025, in 2026, there will be 18% advance payment rate of income tax of credit institutions. And in 2026, security tax of 2% will be introduced. Let us talk about tax-exempt limit of daily allowance for business trips. 75 euros could be as tax-exempt limit for the first 15 days of an assignment abroad, but no more than for 15 days of a calendar month, and 40 euros for each following day. Keep in mind that the part exceeding the tax-exempt limit is taxed as income from employment with income tax, social tax, and contributions. Members of ships and civil aircraft crew. Income tax is not charged on the cost of meals given to a crew member during a voyage flight which does not exceed 20 euros a day per person. Persons working on board ships and aircraft are not covered by the definition of business trips, and therefore they cannot be paid tax-exempt daily allowance during their voyage. They may be on assignment abroad only if they are temporarily assigned to a task outside the ship or aircraft, or use another means of transport to reach their place of work. If you keep driving records, the tax-exempt limit of the compensation paid to one person is 50 cents per kilometer if you use a private car, but no more than 550 euros a calendar month per employer paying the compensation. On the compensation paid to a person who has a disability and uses his or her personal vehicle for traveling between the place of residence and place of work. Otherwise, compensation may be paid to employees for journeys between their place of residence and place of work only in the exceptional cases. Compensations exceeding the tax-exempt limit is subject to income tax and social tax as a fringe benefit. Fringe benefit is in Estonian erisoodustus. And now let us continue with good news. Expenses made to improve the health of employees starting from the next year. 400 euros could be compensated throughout the whole year. And we find that annual limit of 400 euros gives more freedom and flexibility. It is possible to buy a sports club package for a year or pay health insurance contributions for a year, and that may be more favorable than quarterly payments. And what expenses could be exempt from tax? For example, massage, then healthcare services, regardless of the field of medicine. And the service must be provided by a healthcare professional entered in the health management information system or by a specialist holding a professional certificate or professional competence. And there are more good news. For example, expenses for the accommodation of employees. Employers' business-related expenses for the accommodation of an employee working on the basis of an employment contract are not deemed to be fringe benefit if two conditions are met. Firstly, the place of residence of the employee is located at a distance of at least 50 kilometers from the place of work, and the employee does not own any immovable property used as housing. And secondly, the expenses per accommodated employee are up to 500 euros a calendar month in Tallinn or Tartu, and in other cases up to 250 euros. And let us talk about promotional gifts, cost of entertaining guests. Taxation depends on the cost of goods. Income tax is not charged on goods delivered or a service provided for the purpose of advertising if the value of these goods is 21 euros without value-added tax. The tax-exempt limit for the cost of entertaining guests of legal persons is 50 euros per calendar month, plus 2% of the amount of payments subject to individually registered social tax made during the same calendar month. And also there will be changes for tax-exempt gifts of an association entered into the list of associations benefiting from income tax incentives. For example, souvenirs given as a gift to a participant in a permanent youth camp to the extent of up to 85 euros per participant in the camp, and souvenirs given as a gift to a participant in a sport event to the extent of up to 85 euros per participant in the event. And security tax from 2026. A security tax of 2% is levied on the profits of a resident company. The tax base is the line profit or loss before tax of the income statement of the annual report, and it includes sale revenue, other business income, profit or loss from subsidiaries and associated undertakings, financial investment, and so on. In the Security Tax Act, profit before tax from which companies have the right to deduct. For example, they have right to deduct dividends received from subsidiaries and profits attributed to foreign permanent establishments. Regarding security tax, financial year, which is usually a calendar year. If the financial year is not a calendar year, then the profit before tax for the financial year ended in 2026 is in proportion to the number of the months in 2026. And that brings us to the final subject, non-residents. And I will give floor to my colleague Merje.
Let's go further with amendments and changes applicable to non-residents. The changes are very similar to those about which we have already told today, but just to remind that tax rates in case of non-residents will also change. The important thing to remember here is when is the due date when this change begins or is change applicable. The first Annex 2 Form SD submitted by the 10th of February 2025 is that where the new rate of 22% applies. In case of tax returns of natural persons who are resident in another European area agreement country, the first time when the new tax rate, which is increased to 22%, should be submitted by 30th of April 2026. So this time, where the declaration of income of 2024 starts since February of 2025, the previous tax rate of 20% still applies. In case of non-resident natural and legal persons who have to submit forms A1, E1 or V1 about income taxable in Estonia, the new tax rate of 22% is similarly applicable since 13th of April 2026 for a tax return of income received in 2025. And as there is a reduced rate of 10% in some types of income of non-residents, I would like to give you information that this 10% rate does not change now. As been told before about resident companies, legal persons here in Estonia, also tax rate for a non-resident legal person who has the Estonian permanent establishment here in Estonia, tax rate will increase to 22 by 78 since payments made in a year 2025, and also it is not possible to apply a lower tax rate in case of regular profit distribution. This lower rate is no more applicable, just that the general tax rate of 22 by 78 applies to all profit distributions and assets pay out. Yeah, and it is planned that since 2026, also the security tax, 2% of additional tax obligation is calculated upon profit of a permanent establishment here in Estonia, similarly to the Estonian resident company. The income tax rate of 22 by 78 still remains on the profit paid out, but the security tax is different. It will be calculated from the profit, at least as planned now. I just want to remind that this security tax legal act has not been finally confirmed. And something which has not been applicable here in Estonia for a while, that companies, including Estonian resident companies and also non-resident legal persons who have a permanent establishment here in Estonia, there will be advance payments of security tax, which are needed to pay 4 times a year, calculated from the profit of the previous year. There are some differences in the first year and maybe in the last year, that maybe 2 times of advance payment applies. And also there will be differences in case of credit institutions, for example, in calculation of advance payments, because credit institutions here in Estonia already pay advance payments and similar due dates and tax base of the previous quarter profit apply also in case of security taxes. At least it is planned as such now. And in case of credit institutions who are registered as a permanent establishment here in Estonia, of a non-resident, the income tax advance payments of 40% is also changed. The new rate will be 80% since the following year. The only difference is the first payment by 10th March of 2025. The previous rate of 40% applies then because it is calculated from the profit of the previous year. So the new increased tax rate of 18% for credit institutions income tax advance payment is 80% since 10th of June 2025. So, as I already said, security tax is also applicable to income of non-residents, no matter if they are natural or legal persons or if they have a permanent establishment here or not. And it is in addition to the usual income tax. As usual, the payer withholds the security tax on gross income, no deductions available. And in addition to the income which is taxable by income tax, also payments from funded pension pillar, which are exempt from income tax, will be taxable by security tax since 2026. And in case of natural persons who are resident of another contracting state of the European Economic Area Agreement, the basic exemption will not apply in case of calculation of security tax. At least it is the information which is known by now about this new tax obligation. In case of non-residents with a permanent establishment here in Estonia, the annual profit before tax is important in case of security tax because the 2% of security tax will be paid on it in addition to the usual profit or asset taken out from a permanent establishment. And advanced security tax payments shall be paid also by non-residents with a permanent establishment here in Estonia. Maybe it is interesting for you to also know that tax incentives and exemptions applicable to income tax according to tax treaties concluded between Estonia and other countries. Those tax incentives apply also to security tax. For example, if there is a limit of rate on royalties according to the tax treaty with some country that 10% up to 10% may be withheld in the source country, then as the income tax rate is 10% already according to the Estonian tax legislation, there will be no security tax added to it anymore, as 10 plus 2% is already over the limit on royalties applicable in the tax treaty. Or maybe in tax treaties with some countries, there is a limit. There is even tax exemption to the royalties provided for in Article 12 of the tax treaty. Then, as we will not withhold any income tax on that payment, the security tax is also not withheld from the same payment. If it is exempt from income tax according to the tax treaty, then it is also exempt from security tax if the certificate of tax residency has been submitted to the Estonian Tax and Customs Board of the recipient. This will take us to the end of our today's presentation. Thank you very much for your attention. Please keep your eye on our website because lots of information today was just the preliminary information. The final legal act has maybe not has not come into force yet. That is why it is very important to be informed about any news. And in case you have any further questions about today's presentation or any other topic, please feel free to contact us either to either of those email addresses we have on that slide, eraklient@tempta.ee or ariklient@tempta.ee. And you may also write in English language, and we will answer to your questions in English in that case. Thank you.